Welcome back. You're still tuned in with us at Big C on CNBC TV18 Prime. As promised, joining us now is Bas Kooijman, who is the CEO and asset manager at DHF Capital. Thank you so much for joining us, Bas. First of all, I want to get your sense on what are you anticipating in the international markets. We were just speaking to Danube, and they believe it's going to take 6 months in Dubai, in Middle East, for things to come back to normal. Is that what we're looking at as well in various other asset classes?
We also at DHF have an office not only in Luxembourg at our headquarters, but also in Dubai with a large team there. And of course, it has been an uncertain time in the early months of this year. But at this moment, everything is stable, and we do hope that it does stay that way.
When you look at various asset classes and the way gold has behaved, Bas, how are you looking at that? Because it has really been surprising as a move. Tick off West Asia conflict, and we saw the gold prices continue to decline.
Yes. So gold always reacts very much on geopolitical tensions in the world, and it has actually been a quite volatile market over the last 2-3 years with everything happening in the world, instead of quite this stable reserve safe haven that gold always was before. So we're trading around $4,100 at the moment. Of course, we saw this all-time high, 5,500, almost 5,600 in late January. And yeah, we have seen, in my opinion, still a healthy correction of that really high level of almost 27%. But year on year, we are still up. And last year was, of course, an amazing year for gold as well. So it also gives opportunities, a little bit the same as our previous speaker on the show. This kind of moments give opportunities to buy gold at a good price, knowing that it's still a good market in the long run.
Oh, absolutely. But from $5,600 an ounce to almost 4,000 and threatening to break below that, how would you look at the market in the near term? Consolidating around 4,000, or do you think a break below 4,000 is a possibility?
Well, you say it correctly. It is indeed trying to break, but not breaking. We still see the central bank buying. It's a little bit less, but it's still a very stable couple of hundred tons coming in on a continuous basis. So as long as we have stable buyers, large buyers, this 4,000 price should hold. The consensus in general is still very good. 4,900 is the lowest consensus at this moment from Goldman Sachs, but Morgan Stanley and many others are way above the 5,000 level.
Oh, well, yes, they are. And as you mentioned, Bas, the major buying is going to come in from the central banks. What do you think about the retail investment and the ETF buying? Because that is what the theme was last year.
Yeah, we've seen a lot of profit taking basically when prices rise so sharply. As a good trader, you want to buy low and sell high. So if those prices go through the roof, a lot of profit taking we've seen from the retail market, also from hedge funds, and not to forget the SpaceX IPO. So we saw a very serious dip 2 days before the SpaceX IPO, almost directly related, leaving the gold market, at least temporarily, moving into this kind of higher yield opportunities with a stronger dollar. In my opinion, to return later to still diversify the portfolio with a healthy 5 to 10% gold share for hedge if the dollar gets weaker.
And let's talk about the dollar index then, because that is where the major cues seem to be coming in from the market right now. 101.5. Are we looking at 102, 104 kind of levels to come back yet again? And would it stay there?
It's a good question. I think the East geopolitics situation at this moment with the ceasefire has reduced the necessity for the safe haven part of gold and has strengthened this dollar. So the question is if we can stay in this kind of situation, because the dollar fluctuates very much at this moment related to the geopolitical situations as well.
From here on, Bas, the markets also are looking at a very, very hawkish U.S. Fed. A 25 basis point rate hike in the month of December almost seems to be baked into the prices. What is your sense on that?
Those prices are mostly baked in. We see the real market reaction if they do not happen or if they are postponed. I think a lot of the Fed activities are planned for later this year or even only in 2027. And from that perspective, we do think that gold will not yet make this spike. And we have to really keep an eye on any easing on that side.
With the market viewing that the gold prices could consolidate here or maybe perhaps decline from here is something that is keeping many of those retail investors away perhaps. How are you looking at a gold range forming then for this year and for the next year as well?
Yeah, we've seen this 4,000 price like a little bit above for quite a while now. And it's bouncing up and down, but it's not breaking. And it's of course always extremely hard to predict what's low when you want to buy low. Have we reached the bottom? What I can say is that we have a very strong support level at this moment. There is the central bank buying. There is the price on oil that lowered. Of course, equities have a bigger yield at this moment, but it is a good price to at least diversify the portfolio again if you have taken profits in gold in the past. To make sure that you just diversify back into your portfolio, as I do believe this is a very strong support level where we can grow forward. And also, if any geopolitical tensions arise or continue or strengthen, gold will definitely react very quickly to that on the upside.
So, Bas, what you're saying is that we wouldn't be looking at much decline from here in case of gold prices. So the risk on the lower side is not as much, but the reward on the higher side is way better?
Correct. Yeah, if we can see some consensus up to $6,000 by the end of this year, where gold is still in a large growing market, still a lot of purchases coming in. We can definitely see a 5,000 or a high 5,000 towards the end of the year. So as long as those consensus are all still positive, I do think it's not a bad moment to make sure that you have your portfolio diversified and gold is in there.
A couple of questions now, Bas. One is, of course, about the global debt at 350 trillion. The US debt itself is at 38, 39 trillion. Would you see that as one of the reasons that markets would want to get into gold? And this whole conversation that we had last year about de-dollarization or fiat currency debasement and central banks wanting to increase gold holdings therein, where does that stand right now?
Well, I think that's one of the reasons that their central banks have been purchasing so much. Last year was a very big year of purchases to add to those reserves. Worldwide, actually, a lot of purchasing from Asia and also a lot from the European central banks. So it's very important to keep this price stable. We, of course, got way less rate cuts last year than originally were expected. I remember at the beginning of the year, I think 7 rate cuts were expected, and we didn't get those. So from that perspective, it's very important to keep an eye on this on the dollar strength. And anything not going right in that direction means that you will have a very positive yield on gold. And on silver, maybe very good to mention that silver is a very interesting diversification option as well, trading about $81 at the moment, easily able to grow to $100 back.
All right, that's more. Are you more bullish on silver than gold, Bas?
Well, silver has always been a little bit more volatile, but still moving in the same direction. So we've seen just bigger swings on the silver side. And I do believe that silver has an easier way, especially because of the industrial use of silver. It's used in electric cars. It's used in chips. That means it's also used for AI and data centers. So as we are very heavy at this moment, 40% of the S&P 500 is AI related, and silver is necessary for those data centers, those chips, and the energy components as well to run. So I am very positive on a growth on silver over the long run.
All right. I read the very in your positive there, Bas. Thank you so much for joining in. So bullish in case of gold and silver both. For gold, Bas believes that we could be looking at higher 5,000s, but for silver, $100 an ounce is a possibility. And of course, the central bank buying, investment buying could be supportive factors going forward. Thank you, Bas, as always, for joining in. Appreciate you joining us at CNBC India. And with that, that's all the time that we have on Big C. Thank you for watching.